type. Well, hello, you trader nerds. Welcome into a fabulous Thursday. Real traders never trade alone. They trade with their fellow nerds, like Jim B, like 12547, like Daniel, like DMT, like Dwayne, like Hal, like Hugh, like John, like Kevin, like Mo, like Schwaz, like Sean, like Stacy, like Steven, like Trader Nick, and Vicky with an I, and Vicky with a Y. We got all the Vickies in the house. Hey, everybody. Hope you're doing good. I am Sweet Bobby, and we are just here to do a little trading today. Not as much as we usually do because we are now more along the investor. How about us? We're asset gatherers, accumulators. So, not now do we go out and kill the dinosaur like we used to and drag his lowly carcass back to the cave, but now we are asset gatherers. We are hunters and gatherers. We gathered the seeds too, so that is kind of cool. So let's see what we got here. The market's up 20 points, 0.10%. Nothing really you see, is there? I mean, that's what the market does. It goes up and it goes up and it goes up. Oh, that's ES, NQ. Oh, I got NQ. The NQ's up 14, but the ES is down 4.5 because we need to start looking at the NQ more now since we are trading TQQQ, which is 3 times the leverage of regular QQQ. The VIX is at 19.79, almost at 20. And the AD is at negative 266. Waka, waka, waka. With that being said, you would think that the market would be down much more than it is, but that is not the case. Look at this. This is kind of wild. So we're just hanging out here at an inflection point, a pivot point, and the AD is flat, and the hourly mid band is going down a little bit, and we're just above the opening 15-minute range. All right, so let's see what the big green monster looks like. Big green monster, it's amazing, isn't it? How this thing identifies support and resistance. Now, the more times that we poke down at this, though, the more that it's likely that price will go on through. It went through there, but it held up here. So if it keeps, we're kind of in a downward little progression here. So this very well could go down. But if we're looking at our upward target is 58.67. And I think you'll see from the linear regression that we are still in that consolidation period, just trying to make this decision on which way we should go, if we'll go up or we'll go down. So very cool. Very, very cool. So nothing really to see. Let's just make sure that our hedge is in place. Now, some of y'all were worried about the trading plan that I put into our Discord room. And because this one says TQQ 55, 45%, I did a little more back testing and a little more optimizing. And it looked like the more and more the 55, 45 was kind of correct instead of the 43, 57. But what I am doing with Claude is I'm getting Claude to actually design a spreadsheet for me because I'm going to actually test it. I want to make sure that the back test results of this actually going up to $6 million is really, really, really true. It's because this one actually did go up to $6.5 million. So from $100,000. So we just want to test that to make sure that that's right and that we've got the optimized strategy going up to $60 million. The cool thing is the overall growth rate was 40% annually. And if you compared our strategy, now, of course, this is, back tested. Our strategy did 40% compared to SPY doing an average of 12% from 2010 to 2024. Still, if you got 12%, that'd be great. But if you could get 40%, that would be even better. So this was our optimized strategy. And I said, look, you made a mistake down here. Remember the last time you made a mistake? I said, I want you to go through and show me your calculations so that we can make sure that this is indeed correct. Because, the thing is, I can take the same data and open a brand new conversation with Claude, and it doesn't remember the old conversation. and you upload the data, that tell it to do a back test on the thing, and it could come up with a totally different answer. And so you got to check these things. You can't just trust them. You got to say, I've got to figure out, did we indeed make 15% in 2010 with the strategy? And how do I know? Well, I've got to actually see the data and see their calculations and see the allocations per month. And it's going to be a big endeavor for me back testing and double checking the figures here. I mean, because you know, we could easily go, wow, we went from $100,000 to $6.5 million. Sign me up. But what if these calculations of the annual return are not correct? So I think it's important for me to get into the minutia and to get into the weeds and to basically verify based on the data that I fed it that indeed this is right. And I've had it to go back and double check it, and it promises me that it's right. But then when you open a new conversation with a new clause, it doesn't remember the old conversation. If you feed it the same stuff, it can come up with a different answer. So I got to double check this thing. We don't want to just blindly do a strategy. And that's what I'm telling y'all. What I'm doing, and I know I'm already getting buzzed for it, people saying this is the dumbest strategy ever. This is so stupid. This is idiotic. And that's okay. It's all right. I'm willing to gamble $75,000 just to see if this will work. Right. So let's just say, let me be the guinea pig. Y'all don't necessarily go into it with me. Everybody needs to make sure that it is a very risky strategy, and we could have 30, 40, 50% drawdowns. But if you've got a long time horizon, and I think I do, I'm 54 years old, I could theoretically do this for 20 years, right? And let this thing roll. I don't need the money. I've already got my retirement money. You know, I'm sitting here in retirement in my underwear before you right now. And, you know, I don't need the money. So I can roll my $75,000 and see if we can make it into something special. But it would be really, really good if we could. I mean, can you imagine? Let's just see. Let's go to our, no, we're dreaming here. I understand. And it's just fun to dream, isn't it? Let's go to our compound interest calculator. Let's just see. I mean, can you imagine making 40% a year? It'd be unbelievable. So if you went to a compound, and if you said we've got $76,000 in our account, that's the amount we got. And let's say we don't put anything into it, but let's say if you could hold this thing for 20 years, and you go, Bobby, you'd be 74 years old. Friend, I'd be a great 70 years old. And if you could get a 40% return, you know, that's going to, you know, not going to be constant. It'll be up and down from that. But compounded annually, let's calculate that and just see where you would be in 20 years. I mean, you'd only be at 63 million, right? So, could I, at 74 years old, be a happy 74-year-old? Probably so. Probably so. So, you know, it's just fun money, y'all. This is what we call fun money. This is fun money. This is not your kids' milk money. This is not their inheritance, but they would love to inherit that amount, right? This is, hey, can we see if we can do something? So, you know, it's kind of cool. Kind of cool. So let's play with it and see what we can do. So let's see, but the most important thing is to make sure our hedge is in line. That's the really important thing. So let's go to look at our hedge. And everybody's got access to the plan now. It's in the Discord room. And let's see if we can see what our hedge is doing today. Takes a little while for this thing to load up. And, oh, I just gave some money to the relief efforts in Georgia and North Carolina. And, oh, my gosh, it's just, my heart breaks. What's wrong with this thing? My heart breaks with these people. It's just, I hadn't been paying attention to the news lately. And my goodness, it's been just heartbreaking seeing all the loss that's going on here. So let's move this to today's date and let's see what we've got here. We've got cap requirement. We don't have bill. Now, do I still own? Oh yeah, we still own bill, don't we? We got bill. So we're doing ES and TMF and TQQQ. So let's update this report. So it looks like it's taking us $29,000 in buying power in a $75,000 account. So that's really good. Let's look at the risk analysis and get all this updated. Wow. Okay, so 10-2. Is today the second or the third? I thought it's the third. Let's go to the third today. So it only says I've got $11,000 worth of hedge to the downside. But now keep in mind, y'all, that is including if TQQQ goes down 90%. Isn't that what that says? 90%? So we don't have that many shares. We've got what? I don't remember. Let's see how many shares we've got. Let's see, TQQQ, we got 145 shares. So if 145 shares, it is, look at there, we've already made 1.2% on that. Isn't that great? Let's see, what is this trading for? TQQQ, let's go, TQQQ is $70. So let's just see if, let's double check our math here. So let's see if we're at $70,000 and this goes down 90%, right? So that would be us only having, wait a minute, no. We've got 145 shares times 70, 10,150. That's all we've got in TQQQ. So if this was pi 0.10, that would be $1,015 left over, right? And let's see what this thing looks like again. You got to double check this stuff, y'all. You just can't see, yeah, that doesn't make sense being down 2,243. Now this should have no effect on it. Let's see if this shows any effect on it. Yeah, the volatility has no effect. Oh, here's TQQQ. Yeah, there it is. Let me go back to 40 now. I was looking at the wrong thing. This is our TMF would be down. And yeah, this is right. We would be down $9,134. But look at this, y'all. You are perfectly protected in the event of a crash. In other words, crash, baby, crash, baby, crash. And I know what you're saying. Hey, but Bob, you only bought 1/6 of your account in this. What's going to happen when you got the whole thing there? Well, this may be down some, or we may have to beef up our hedge a little bit, right? We may just have to beef up our hedge just a tad to keep the, in other words, I don't want to have a big catastrophic loss from a crash. And that's my new goal. My new goal is not to, be a greedy scoundrel and make off like a bandit in a crash. I just don't want to lose money in a crash. So if we can do a TQQQ strategy and hold it with a crash, and I know what you're saying, hey, Bob, you're in TQQQ and your hedge is in ES. Why don't you do your hedge in QQQ? Well, that's a good point that we could do it in QQQ, but really in crash, they would probably both be crashing, probably the Qs and the S&P 500. So we would be fine. So I think I'm going to keep my hedge where it is. If you want to do the hedge and the Qs, that's fine. It's just I'm more comfortable doing it in ES. I'm not comfortable doing it in NQ because I've not done it before. I don't know how to do it. I know how to do this. So I think we're going to be fine having these two highly correlated assets in our little program here. So it's really good. So, I know people are going to criticize me today, and I shouldn't care what people think about me. But hey, in 20 years, if it's a possibility that we could turn 76,000 into 63 million, hey, let's go for it. Let's go for it. We can at least dream, right? Say we only make 20% a year. I mean, say that our back testing is wrong. Let's say we're totally crap. This is a horrible strategy. Let's say if we only do 20%. All right, we'll make 2.9 million. Is that okay? Sure. Will that send me to Disney World every year? Of course. Absolutely. So we got time on our side. So let the crashes come, let the crashes come. We're going to be just fine. We're not going to be losing money in the event of crashes, and we're going to keep on keeping on. Let's see what y'all talking about. Can you see the NQ big green monster? Remember, it's 3x leverage. It is 3x leverage. It is. So we're fine there. Let's look at the big green monster in NQ. That would be interesting. Maybe we need to start doing that. Maybe instead of looking at the ES every day, maybe we need to start looking at the NQ. So let's see if we can do the NQ Big Green Monster real quick, like, if I can remember how to do it. Remember, I only do this 12 times a year, so I'm not that good at it. But we think we're right on it. So let's go ES, and let's go NQ here. NQ. E-mini NASDAQ 100. What the crap? Where's my stuff at? Here we go. All right, there's September and October. So does it look different? How does that look over here instead of over here? It's freaking me out a little bit. All right, let's do this. So let's draw from the bottom to the top. And let's edit. Move this over to the right. So the top is 2517.5. 2517.5. And the bottom is 18585.5. 18585.5. 85.5. Everything looks good there. God, I'm nervous in front of y'all. It's like I don't know what I'm doing. Oh my gosh, look at this. The 50% is right down the middle of that. So what do you do in that instance? You don't do nothing, Jack. You just call this green and call it. So let's edit this. And let's call this October for November. Oct for Nov. And then we'll make it all green. Set color for all curves in green. And then let's go back to volume profile. And then we'll do NQ here. And let's see what she looks like. See if we can get any garner of what's going to go here. Okay, so we are in NQ. We are fairly priced. It's amazing. We're at the opposite end though, aren't we? We are fairly priced, but it's more likely that we're going to go down in NQ than it is in the ES. ES looks like it's more bullish actually. And this looks like it's more bearish because we've got this little ceiling up here, right? So we are fairly priced and we are at the point of control. Very, very cool. Very, very cool to see two highly correlated indexes look kind of different. Why is there a large difference? That's a good question, Daniel. You said the high is 2538 for the month of, let me ask you this. Are you using overnight data? That might be the case. I don't think that I'm using overnight data. I think that might be the case. Okay, yeah, that's it. That's probably why there's a difference. So you're using overnight data and I'm not using overnight. I think I just use the regular during the regular trading hours. But this is kind of cool, right? So I don't use it for the I don't use it for the big green monster though. That's the way Blake taught me. Blake is the man. Blake is the man. I love giving people credit for their stuff. Y'all, I don't have an original idea on the planet. I don't have an original idea on the planet. And if y'all haven't figured it out, I don't know what I'm doing. I have no idea. This is blind leading the blind, y'all. But, we're going to try this. Let's see if we can look at the linear regression of QQQ. Let's see what it looks like. I'll go talk to some high school students and I'll tell them, I've got 76,000. If I could put it into, what if I put all, hold on, what if I put, can you imagine? Hold on a second. Let's just play. Y'all want to have some fun for a minute? Let's see. The total of all my accounts is 558,000. So let's say 559,000. Can you imagine? All right. So let's say if we did the whole thing, we did $559,000. Is that right? 559. No, there it is. 559,000. So 559,000 for 20 years. And if you could get a 40% return, let's see if I'm in Bill Gates territory here. Calculate. Oh my God. You'd only be at, what is this? 705,000, 467,705,547.83. Don't forget the 83 cents. Don't forget to tip your waitress. Let's put the whole thing in it. Oh no, I'm not going to be that risky. But it would be cool, wouldn't it, to go, hey, let's turn this into 467 million. All right. Anyone got any questions about anything? Y'all all got the plan. You've all got the plan. You know what to do. We've got the prompts. Now I got to get with Claude and do the back test myself. I am not trusting Claude with these numbers. We're going to do it ourselves. We're going to make sure everything looks really, really good. All right, guys, I love you to pieces, and thank y'all for being with me every day. I love you, and hope you have a great rest of your day, and I will see y'all